Ladies and gentlemen, Asian guy here. For the last 3 videos, we have focused on the banks. We talked about JP Morgan flipping long. We talked about the European banks defaulting. We talked about the paper games, the derivatives, and the financial suppression. But today, I need you to forget about the banks, forget about the Fed, forget about the Comex floor. Because while we were watching the financial magicians perform their tricks, a new beast entered the room, a beast so large, so hungry, and so desperate that it doesn't care about the price of silver. It only cares about survival. We are talking about big tech. We are talking about the industrial giants of the East. We are talking about Samsung. You see, for 40 years, the price of silver was determined by men in suits trading paper contracts in New York and London. They traded air. They traded promises. But today, the price of silver is being hijacked by men in lab coats in Seoul, in Tokyo, and in Shenzhen. The dynamic has shifted from financial speculation to industrial famine. And the scariest part, the industry isn't buying to hedge inflation. They aren't buying to make a profit. They are buying because without silver, their companies cease to exist. Let's look at the breaking news that the mainstream media is ignoring. Reports are filtering out of South Korea that Samsung SDI, the battery and electronics arm of the conglomerate, has initiated a massive strategic stockpiling program for critical metals. But they aren't just buying lithium. They aren't just buying cobalt. For the first time in decades, they are aggressively securing physical silver. Why? Because the supply chain is breaking. The just-in-time inventory model, the model that taught companies to hold zero inventory and buy only what they need for tomorrow, died in 2020. It was buried in 2022. And in 2026, it is being replaced by just-in-case. Companies like Samsung, Apple, and Tesla have realized that silver is the bottleneck of the 21st century. They have realized that if they don't own the metal, they can't build the phone, they can't build the car, they can't build the missile. This is the industrial pivot, and it changes everything. When a hedge fund buys silver, they will sell it if the price drops. They are weak hands. But when Samsung buys silver to put into a solid-state battery pilot line, they never sell. That silver is consumed. It is welded. It is glued. It is gone. It is taken off the market forever. The industrial users are the ultimate diamond hands. We used to worry about JP Morgan suppressing the price. But JP Morgan is a rational actor. They want to make money. Samsung is an existential actor. They need to make products. If silver goes to $50, JP Morgan might sell to take profits. If silver goes to $50, Samsung has to buy more. If silver goes to $100, Samsung has to buy more. If silver goes to $500, Samsung has to buy more. Because the alternative is shutting down a $200 billion factory. This is the concept of inelastic demand. It means the buyer is insensitive to price. And right now, the tech giants are realizing that silver is the most undervalued, critical strategic asset on the periodic table. They looked at the charts. They saw the same deficit we saw. They saw the mining production falling, and they panicked. But they panic differently than you and me. When we panic, we run to the local coin shop. When Samsung panics, they send a team of lawyers and geologists to Mexico. They go directly to the mines. They bypass the Comex. They bypass the LBMA. They sign what are called off-take agreements. They tell a miner, we will buy 100% of your production for the next 10 years. Here's a check for $500 million up front. Don't send a single ounce to London. Send it all to Busan. This is the vault vacuum. This is why the Comex inventories are draining even when the price is stagnant. The metal isn't being sold to investors. It is being intercepted at the source. The river is being diverted before it even reaches the reservoir. The Comex is the reservoir, and Samsung is building a dam upstream. We are witnessing the privatization of the world's silver supply by the tech elite. They are building their own stockpiles, their own private forts of precious metals. Elon Musk hinted at this years ago with nickel. Now it is happening with silver. They know that the green energy revolution is essentially a silver revolution. You cannot have one without the other. Think about the sheer scale of Samsung. They make everything. Ships, chips, phones, batteries, screens. Every single one of those products requires silver. Silver is the most conductive metal on Earth. It is the most reflective metal on Earth. It is antibacterial. It is indispensable. There is no substitute. Scientists have tried for 50 years to replace silver with copper or aluminum in high-end electronics. They failed. Silver is the Goldilocks metal. It is perfect. So, what happens when the perfect metal runs out? We are about to find out. The deficit in 2024 was over 200 million ounces. In 2025, it grew. Now, as we head into 2026 with the new industrial mandates, we are looking at a deficit that could swallow the entire annual mining production of Peru and Australia combined. The banks flipped long because they saw Samsung coming. JP Morgan didn't become a silver bull because they liked the metal. They became a bull because they saw the purchase orders from the industrial giants. They saw the internal flows. They knew that you cannot short a market where the biggest buyer has an infinite wallet and zero price sensitivity. This is a famine, but it's not a famine of food, it's a famine of conductivity. And in a digital world, conductivity is life. If you control the silver, you control the flow of information. You control the flow of energy. Samsung knows this. China knows this. That is why China has forbidden the export of silver ingots. They are hoarding every ounce they dig out of the ground. The West is asleep at the wheel. The US government is selling silver eagles to collectors while the East is buying industrial bars to build the future. We are trading coins, they are trading empires. And where does this leave the investor? It leaves us in the most bullish position in history, because we hold the one thing the giants need. Right now, they are draining the mines. But soon, the mines won't be enough. Soon, Samsung will have to come to the open market. They will have to come to the ETFs. They will have to come to the stackers. Imagine a world where Apple puts out a press release. We are delaying the iPhone 18 due to silver shortages. What happens to the price then? It gaps up $50 in a day. That is the reality we are barreling towards. The industrial famine is here, the table is set, and Samsung just sat down to eat everything. We have established that the tech giants are the new whales. But within the tech sector, there is one specific monster that is eating silver faster than any other. It is the solar singularity. We need to talk about photovoltaics, PV. We need to talk about the green energy mandates of 2026. And we need to talk about why the government's own laws are going to break the silver market. For years, analysts said, don't worry, solar panels will get more efficient. They will use less silver. This was called thrifting. And for a while it was true. But that trend has reversed. We have hit the limits of physics. The old solar technology, called PERC, is being phased out. The new technology, called TOPCon and HJT, heterojunction, is taking over. Here is the critical detail. TOPCon and HJT cells use 50% to 80% more silver per panel than the old technology. We are not thrifting anymore. We are loading up. To get higher efficiency, to get that extra 1% of energy from the sun, they have to use thicker silver paste. They have to use silver on both sides of the cell. Now combine this technical reality with the political reality. The year 2026 is the deadline for massive green energy mandates in Europe, China, and California. The net zero goals are legally binding. Governments are subsidizing solar installations by the trillion. They are printing money to build solar farms in the desert, on rooftops, on floating platforms in the ocean. Let's do the math. In 2024, the solar industry consumed roughly 190 million ounces of silver. That was already a record. It was roughly 20% of the total global supply. But the projections for 2026 are terrifying. With the shift to TOPCon cells and the exponential growth in gigawatts installed, estimates suggest solar alone could consume 300 to 350 million ounces. 350 million ounces. That is nearly 40% of all the silver mined in the world. Just for one industry, just for solar panels. Think about that. One single sector is about to eat almost half of the global supply. What is left for jewelry? What is left for electronics? What is left for investment bars? What is left for you? Nothing. We are entering a zero-sum game. The solar manufacturers are in a panic. I speak to industry insiders. They tell me the mood in the boardrooms of Chinese solar giants like Jinko Solar and Longi is pure fear. They are terrified of running out of silver paste. If they run out, the factory lines stop. If the lines stop, they default on government contracts. If they default, they go bankrupt. So, what do? They buy at any price. If silver is $30, they buy. If silver is $100, they buy. Why? Because the cost of silver in a solar panel is roughly 10-15% of the total cost. If silver doubles, the panel becomes 10% more expensive. That is painful, but it is manageable. They can pass that cost onto the government or the consumer. They can absorb it, but they cannot absorb a lack of metal. This creates a price floor under the market that is made of concrete. The solar bid is relentless. It is a vacuum cleaner that runs 24/7. And it is competing directly with the Samsung battery bid we talked about. It is competing with the investment bid. And here is the government's role. The US government and the EU have passed laws requiring a transition to renewables. They have essentially legislated a silver squeeze. They passed the laws without checking the geological reality. They wrote the checks without checking the vault. They have mandated the consumption of a metal that they do not have. This is the ultimate irony. The same governments that allowed the banks to suppress the price for 40 years are now the ones forcing the price to explode. They have trapped themselves. If they want green energy, they need high silver prices to stimulate mining. If they suppress the price, they get no silver, and the green revolution fails. They have to choose. Save the banks or save the planet. It looks like they are choosing the planet, and the banks are switching sides to profit from it. The solar demand is also consumptive. This is a key word. When you buy a silver coin, that silver still exists. It can be melted down and resold. But when silver is printed onto a solar panel, it is effectively destroyed. It is glued to silicon and glass. It is installed on a roof for 25 years. Recycling silver from solar panels is currently expensive and difficult. Most of it ends up in landfills. So we are taking 350 million ounces a year, the annual production of Mexico and Peru combined, and we are burying it. We are vanishing it. We are depleting the world's stock of above-ground silver at a rate never seen in human history. We are burning the furniture to keep the house warm. And the growth curve is exponential. Solar installation isn't growing linearly, it is vertical. India is just getting started. Africa is just getting started. Every human being on Earth wants energy, and silver is the conduit for that energy. The industrial famine is being driven by this relentless government-mandated hunger. The solar companies are now bypassing the silver paste makers and trying to buy raw bars directly. They're acting like central banks. They're stockpiling. When you look at the chart of silver, don't look at the technical resistance lines from 1980. Look at the gigawatt installation chart of solar. They are the same chart. The price of silver has to catch up to the reality of solar. It has been held back by paper derivatives, but the physical gravity of 350 million ounces of demand is impossible to ignore. This is why the banker flip happened. JP Morgan knows the solar numbers. They have analysts who count the panels. They know the math doesn't work at $30. They know the math only works at $100 or higher to incentivize new mining. The solar singularity is the black hole that sucks in all the silver. And standing on the edge of that black hole is Samsung fighting for scraps for their batteries. And standing behind them is us, the stackers, holding the only inventory that is actually accessible. The squeeze isn't coming. It is already here. It is just disguised as a supply chain delay. But soon the delay becomes a stoppage. And the stoppage becomes a crisis. And the crisis becomes a mania. We have covered the massive drain of solar. Now we need to throw gasoline on the fire. We need to talk about the black swan technology that nobody is pricing in, the technology that Samsung is betting its entire future on. Solid-state batteries, SSB. For years, electric vehicles used lithium-ion batteries. They used lithium, cobalt, nickel, and graphite. Silver was used in the electronics of the car, maybe 20, 30 grams per vehicle for the connections and switches. It was significant, but not a game changer. But enter the solid-state battery. This is the holy grail of EV technology. It charges in 9 minutes. It has a range of 600 miles. It doesn't catch fire. Samsung has announced they are beginning mass production in 2027, with pilot lines running now in 2026. Toyota is doing the same. Here's the secret they don't put in the press release. The most effective anode for a solid-state battery is a silver carbon composite. To make these batteries work, to make them stable and fast charging, they are using a layer of pure silver nanoparticles. How much silver? Early estimates suggest a solid-state EV battery could contain anywhere from 50 to 100 grams of silver. Some prototypes use even more. Let's be conservative. Let's say 50 grams per car. Now, multiply that by the projected EV production of 20 million cars a year. That is 1 billion grams of silver. That is roughly 32 million ounces. Doesn't sound like much compared to solar? Wait, that is just for the battery. Add the 30 grams already used in the car's electronics. Now we are at nearly 100 million ounces for the auto sector. But if the tech improves and silver loadings increase, or if EV adoption accelerates, the auto industry could rival the solar industry. We are looking at a future where two industries, solar and auto, consume 100% of global mine supply. 100%. This is the industrial pincer movement. Solar squeezes from the left, EVs squeeze from the right. And in the middle, the jewelry market, the electronics market, and the investment market are crushed. Samsung knows this better than anyone because they are building the batteries. They know the chemistry. They know that without silver, the solid-state revolution fails. That is why they are buying mines. That is why they are panic buying. This brings us to the vault vacuum. I mentioned earlier that tech giants are bypassing the Comex. This is critical to understand. In the old days, a miner in Peru would dig up ore, refine it into door bars, ship it to a Swiss refinery, turn it into 999 bars, and send it to the London vaults or the Comex vaults. From there, banks would sell it to users. That chain is broken. Now Samsung goes to the miner in Peru. They say, we will build a refinery right here next to your mine. We will take the door bars, refine them ourselves, and fly them directly to our factory in Seoul. The metal never touches the open market. It never gets counted in the LBMA inventory data. It never shows up in the Comex registered category. It vanishes from the public eye. This creates a ghost supply. The mining numbers say 800 million ounces were produced, but the market only sees 400 million ounces available. Where did the other 400 million go? Into the private stockpiles of big tech? This creates a false sense of security for the shorts. They look at the mining reports and say, oh, there is plenty of supply. But they go to the vault to withdraw, and it's empty. The supply exists, but it is encumbered. It is already spoken for. It is owned by Samsung. It is owned by Apple. It is owned by Raytheon. This vault vacuum is the reason why lease rates are soaring. If you want to lease silver right now, it costs a fortune. Why? Because there is no loose metal. It's all locked up in industrial offtake agreements. The OTC derivatives we talked about in the last video, they are bets on the public float. But the public float is shrinking every day. The liquidity is drying up. When you have a market with shrinking liquidity and rising demand, you get volatility, you get gaps, you get a price that can move $5 in seconds because there are no sellers. Samsung is effectively cornering the market, not to make a profit, but to ensure survival. This is a defensive corner. The Hunt brothers tried an offensive corner in 1980 to squeeze the banks. Samsung is doing a defensive corner to prevent their assembly lines from stopping. The defensive corner is much more dangerous because they will never sell. The Hunt brothers eventually had to sell. Samsung will never sell. They will use the metal. We are watching the de-financialization of silver. Silver is becoming less of a currency traded by banks and more of a strategic resource hoarded by empires. It is becoming like uranium. You don't trade uranium on a street corner. It is controlled. It is strategic. This shift leaves the paper market completely exposed. The paper contracts on the Comex are claims on a metal that is rapidly disappearing into private industrial vaults. The number of paper claims per available ounce is skyrocketing. It used to be 100 to 1. Soon it could be 500 to 1. When the music stops and the Comex tries to settle, they will find that the only metal left is the metal in the hands of the stackers. The industrial metal is gone. The strategic metal is gone. The only free float left is the coin in your pocket and the bar in your safe. That makes you the market maker of last resort. Eventually, Samsung will call you. Eventually, they will have to put out a "We buy gold and silver" ad, but offering 50% above spot. Because they have drained the mines and they still need more. The solid-state revolution is the nail in the coffin for cheap silver. It turns silver from a precious metal into a battery metal. And look at what happened to lithium. Look at what happened to cobalt. When a metal becomes a battery metal, it goes parabolic. We have looked at the demand side. It is a monster. Solar, batteries, tech giants, a three-headed dragon eating everything in sight. Now we must look at the supply side. Can the miners save us? Can they ramp up production to feed the dragon? The short answer is no. The long answer is hell no. Welcome to the supply cliff. For the last 10 years, the price of silver was suppressed so low, manipulated so hard by the banks, that no one invested in new mines. Exploration budgets were slashed, geologists were fired, mines were put on care and maintenance. You cannot just flip a switch and start a new mine. It takes 10 years from discovery to first pour. 10 years. If we find a massive new deposit today, it won't produce a single ounce until 2036. But Samsung needs the metal now. Solar needs the metal now. And the geology is fighting us. The head grades are collapsing. The head grade is the amount of silver in a ton of rock. 20 years ago, it was common to find mines with 15 or 20 ounces per ton. Today, we are mining 4 or 5 ounces per ton. We are moving mountains of dirt to find crumbs of silver. This means energy costs go up. It means we need more diesel, more labor, more water to get the same amount of metal. Inflation is hitting the miners hard. The all-in sustaining cost, AISC, to pull an ounce of silver out of the ground is rising to $20, $25. In some places, it's $30. So, at $30 spot price, miners are barely breaking even. They aren't making enough profit to explore. They are just surviving. This is the legacy of the bank suppression. By keeping the price artificially low, they destroyed the supply pipeline. They ate the seed corn. And now, the famine is here. Also, remember that 70% of silver is a byproduct. It comes from copper, lead, and zinc mines. It is an accident. Miners don't dig for silver, they dig for copper and get a little silver on the side. This means silver supply is inelastic to price. If silver goes to $100, a copper miner isn't going to produce more copper just to get the silver. They only care about the copper price. So even if silver explodes, supply will not react. We are stuck. Demand is vertical. Supply is flat or falling. This is Econ 101. When demand exceeds supply and supply cannot increase, price must rise until it destroys demand. But wait, we established that demand is inelastic. Samsung must buy. Solar must buy. They won't stop buying at $50. They won't stop at $100. So, if price cannot destroy industrial demand, what does it destroy? It destroys the monetary demand. It prices out the poor. It prices out the small investor. It prices out the jewelry buyer. Silver becomes unobtainium. We are heading for a world where you simply cannot find silver at the store. The out-of-stock sign will become permanent. The premiums will detach from reality. The spot price might be $100, but the physical price will be call for quote. This is the industrial famine meeting the investment panic. As the price rises, investors wake up. They see silver moving. They want in. But the industry has already bought it all. This collision is what causes the super spike. It is a clash of titans over a shrinking pile of scraps. The U.S. banks know the geology. They have the satellite data. They know the mines are tapped out. That is why they stop shorting. You don't short a famine. You hoard food. And that is what JP Morgan is doing. They are hoarding the metal. And look at the political instability. Mexico, the world's largest producer, is becoming hostile to foreign miners. Peru is unstable. Changes in mining laws, taxes, and nationalization threats are looming. The supply chain is fragile. One strike in Mexico, one blockade in Peru, and the world loses 20% of its silver supply overnight. In a tight market, that is catastrophic. Samsung sees this risk. That is why they are buying the mines. They want vertical integration. They want to own the dirt. So, what is the end game? The end game is a price revaluation that shocks the world. We are not looking at a bubble. A bubble is when price exceeds value. We are looking at a market correction to the upside. Silver has been undervalued for 50 years. It is a coiled spring held down by the weight of paper fraud. The industrial famine is the pair of bolt cutters snapping the wire. When the spring releases, it won't stop at $50. It will overshoot. It will go to levels that seem ridiculous today. But remember, palladium went from $500 to $3,000 when the industry ran out. Rhodium went to $29,000. Silver is next. This is the final warning. The window to acquire physical metal is closing, not because of the price, but because of availability. Soon you will be competing with Samsung. Soon you will be competing with the Green New Deal. Soon you will be competing with the US military, and you will lose that competition. They have deeper pockets, they have government mandates, they have armies. But right now, for a brief moment in history, you can still buy an ounce of silver for the price of a cheap dinner. You can still buy the same strategic metal that runs a cruise missile or a solid-state battery for pocket change. This is the greatest asymmetry in financial history. The famine is here. The whales are eating. The vaults are emptying. Samsung just bought it all, did you? I'm Asian Guy. Secure your position before the sold out sign goes up forever. I'll see you at the top of the mountain.